You're a first-time home buyer thinking about using an FHA loan to buy your first home. But there are several misconceptions about FHA loans and some mistakes you may want to avoid. I'm going to tell you some of the most common ones that I see working with first-time home buyers. I'm Shaheedah Hill, getting you over the hill to home ownership and helping you confidently buy your first home. I'm going to go over the top 5 common misconceptions about FHA loans. But first, you need to understand that there are 4 primary loan types. 3 of them are government backed, and there's one that's a private loan mortgage option. Okay, so the government loans are FHA, USDA, and VA. FHA is for anyone that, as long as they have a down payment of 3.5% and at least a 580 credit score. Then you have USDA loans that are 100% financing, but you have to be moving to a rural area. And then you have VA loans, and those are for veterans or people currently serving in the military. So those are our 3 government products. And then you have conventional loans, more private loans that are not backed by the federal government. All right, so now you know your loans, but you're thinking that you want to do an FHA loan because they're usually popular because they give you a low down payment of 3.5%, and you can have a low credit score as low as 580. Let's go with the 5 common misconceptions because I don't want you to make these mistakes. Number 1, when you do a loan approval, generally speaking, a lot of lenders will just tell you, hey, you're approved for FHA. They never really discuss with you if you were also approved for a conventional loan, because conventional loans typically don't have as many fees as FHA loans. But because FHA loans are easier to qualify for, and they also typically have you qualify for more because they allow for a higher debt to income ratio, a lot of lenders will just say, hey, you're approved for FHA. So the first thing I want you to speak to your lender about is, am I also qualified for conventional? And if so, how much? Those are the discussions that you want to have. So then at least you have a choice where FHA, say you're qualified for 400,000, and conventional, because the debt to income ratio is a little bit lower, you may be qualified for 370. And they're just assuming you want the higher amount, so they go with FHA. So you want to have those conversations with your lender to say, okay, if I'm qualified for both, what are the terms for the FHA and what are the terms for conventional? Because oftentimes, conventional also has a low down payment program, Home Ready, and it's as low as 3%. I did a full video on those conventional low down payment options as well. So you can do a 3% down conventional loan. And like I said, some conventional loans also have 100% financing. So I've done videos on conventional, the lower down payment conventionals, and the 100% financing conventionals. Number 2, that people often get confused by using an FHA loan. So FHA loan sets a minimum guideline. For example, they're going to say minimum credit score 580. However, each bank gets to choose their own minimum. So if FHA says the minimum, will back is a 580, ABC National Bank could say our minimum is 620. So don't assume just because the government or FHA puts a minimum that every single lender is using that minimum. You'll find a lot of lenders have their own minimums. They may put their minimum credit score at 650, 660. So if you have a credit score that's lower, like a 585 or 590, you may find that you're not qualified at some banks, but that doesn't mean you're not qualified. You're not qualified by that lender. And you're going to have to find a lender that will do an FHA loan at a lower credit score. So just be mindful of that. Banks, FHA has their guidelines and their minimums, but each lender has their own set of minimums and their own standards when it comes to lending. It may be you need a higher credit score. It could be that you need a lower debt to income ratio. Those are just what FHA sets as their minimum standards. Number 3. Mortgage insurance is for the life of the loan. Make sure you understand this when you're getting an FHA loan. There's going to be an extra fee to protect the lender if you default, and it's called mortgage insurance. And that's what makes FHA loans more expensive typically, more fees than conventional loans. You are going to pay mortgage insurance for the life of the loan. The only exception to that is if you put at least 10% down, you only have to pay mortgage insurance for 11 years. But if you put the minimum required down payment for FHA, which is 3.5%, or even if you put 5% down, they are going to require you to pay mortgage insurance for the life of the loan. And they base that mortgage insurance amount off of your balance. So as you pay down your balance, the mortgage insurance amount decreases, but you will also, at the closing of your loan, you're going to pay a mortgage insurance premium of 1.75%. Now, you can roll that into the cost of the loan, but again, that's what makes FHA loans more expensive because of that mortgage insurance. You'll pay 1.75% when you purchase the house. But again, that can be rolled into the price of the house, so you're not paying out of pocket. Well, you'll also pay a monthly or a yearly premium, but they break it up every month. So with all of your payments, you're paying a mortgage insurance amount. Even if you have, equity in the home, you're still going to be paying that mortgage insurance. So be mindful of that, because people that have done FHA loans in the past may have different terms. FHA made mortgage insurance a requirement for the life of the loan in 2013. So if you're talking to other family members who maybe did FHA, in the early, 2000s and the 90s, they're like, oh yeah, we got rid of our mortgage insurance. That's not the case for new loans. If you're getting a loan for FHA, you will pay mortgage insurance for the life of the loan unless and I'll have a full video on how you can get rid of your mortgage insurance, but you have to refinance out of the FHA loan. And it doesn't always make sense to refinance. So again, I have two videos. I have one, how to get rid of your mortgage insurance. The other one is how to, when it makes sense for you to refinance. Number 4, every lender does not, big not, have the same FHA rate. Another common misconception. A lot of first-time home buyers feel that because it's backed by the government that everybody's offering the same rate, and that's simply not true. Okay, so it's not like the government says all FHA loans are 6%, all FHA loans are 3.5%. Every lender that offers an FHA loan has different interest rates based on their business, based on, their profitability, based on their business structure. They do not all have the same rate. And I've even had lenders that try to say this, oh, we all have the same rates. They do not. You want to shop around. I'm going to give you 3 websites in the description of this video that helps you find out what is being offered in your area for FHA, conventional, so you have an idea of what people are being offered so you can know how to negotiate. And I also say, make sure you're getting at least 3 quotes, even if there are 3 FHA quotes with 3 different lenders, so you can know that you're getting the best rate. Every lender does not have the same FHA interest rate. And then lastly, FHA, I did a full video. Now, this is not as important in a balanced market or in a buyer's market, but in a seller's market, some sellers did not want FHA loans. And there's a lot of reasons, and when you're in a seller's market, sellers have a lot of choice. This is not as big of a deal when you are looking at a buyer's market or a balanced market, because sellers don't have that much choice to choose between a conventional offer and an FHA offer. But if in your market you are in still in a seller's market, then FHA, there may be some reasons why sellers may not want your FHA loan, and I would advise you to watch that next. Thank you so much for watching. Please like and subscribe to my channel for new videos every week.